Our headline today is this: Nasdaq seeks rule change with SEC to trade tokenized stocks. Now, for those who might not be immersed in the world of blockchain, this sounds like a bit of technical jargon, but make no mistake, this is a seismic event. This isn't just a new product offering, it's a strategic move by one of the world's most influential stock exchanges to bring the power of blockchain technology directly into the heart of the US capital markets. The proposal, filed with the US Securities and Exchange Commission (SEC), is a direct challenge to the old guard of finance and a bold embrace of a decentralized future. To truly understand the magnitude of this, we need to break it down. What exactly is a tokenized stock, and why does Nasdaq want to trade them? A tokenized stock is a digital asset created and recorded on a blockchain that represents ownership of a traditional stock. Think of it as a digital twin of a share of Apple, Microsoft, or any other company traded on Nasdaq. The key distinction is that while a traditional stock's ownership is recorded on centralized ledgers by entities like the Depository Trust Company (DTC), a tokenized stock's ownership is recorded on a distributed, immutable blockchain ledger. Nasdaq's filing is a direct attempt to integrate these tokenized versions into their existing infrastructure. They are proposing a system where tokenized stocks and their conventional counterparts can be traded on the same order book, with the same execution rules, and importantly, with the same rights for the holder, from voting power to dividend claims. This is a crucial detail. Nasdaq is not looking to create a Wild West unregulated parallel market. They are seeking to bring this new technology under the protective umbrella of the SEC's existing federal regulations, ensuring that investor safeguards remain front and center. This move is a direct response to a growing global trend. For some time now, platforms outside the US, particularly in Europe, have been offering tokenized versions of US stocks. However, many of these products are not true representations of ownership. They are often derivatives or synthetic versions that give investors price exposure but do not confer the actual rights of a shareholder. Nasdaq's proposal is a preemptive strike aiming to bring this activity under US regulatory oversight, ensuring transparency and preventing capital from migrating to less regulated and potentially more risky offshore platforms. The impact of this on the global US market and global stocks would be profound, and it's where we need to spend the majority of our time today. This is not about a quick pump and dump. This is about a long-term fundamental shift. First, let's talk about the efficiency and cost. The traditional process of trading, clearing, and settling stocks is cumbersome and slow. It can take up to 2 days for a trade to fully settle. This T+2 settlement time creates significant counterparty risk and locks up capital. By leveraging blockchain technology, tokenized stocks have the potential for near instantaneous 24/7 settlement. This would drastically reduce risk and free up capital, injecting greater liquidity and efficiency into the market. For large institutional investors, this could translate to billions of dollars in operational savings and increased capital efficiency. For the average investor, it could mean faster access to their funds and a more streamlined trading experience. Second, this is a move toward a truly global 24/7 market. The current system is fragmented by time zones and limited trading hours. A person in Asia cannot buy a US stock in the middle of their night, but a tokenized stock traded on a blockchain could theoretically be traded at any time, day or night, anywhere in the world. While Nasdaq's initial proposal likely won't enable this immediately, it lays the foundation for a future where global markets are always on and always connected. This increased accessibility could lead to greater liquidity and price discovery as a larger pool of global investors participates in the market. Third, and perhaps the most important, this democratizes investment. While fractional shares are already a reality, tokenization takes this concept to a new level. Blockchain technology makes the issuance and tracking of fractional shares far more transparent and efficient. This means an investor with a small amount of capital could own a tiny fraction of a high-priced stock like Berkshire Hathaway or a private company that isn't publicly traded yet. It lowers the barrier to entry, allowing a much broader range of people to participate in wealth-building opportunities. This is not just a benefit for the investor, it also opens up new avenues for companies to raise capital from a wider pool of investors, including those in emerging economies. Fourth, consider the ripple effect on innovation. This is a clear signal to the rest of the financial industry that blockchain is not just a passing fad. If Nasdaq, a pillar of the traditional financial system, is embracing this technology, it will accelerate adoption by other exchanges, banks, and financial institutions. We are already seeing this. Citadel Securities has been engaging with regulators on the topic, and banks like JP Morgan have been exploring tokenized assets. The domino effect is about to begin, and it will usher in a new era of financial products and services built on blockchain. Now let's zoom in on the specific implications for the United States. This proposal places the US at the forefront of financial innovation. For years, the SEC has been criticized for its cautious approach to crypto regulation, with many in the industry arguing that this has pushed innovation offshore. This Nasdaq filing, coupled with the SEC's own stated agenda to consider new rules for digital assets, suggests a shift in regulatory attitude. By working with the SEC, Nasdaq is setting a precedent that will likely become the blueprint for others to follow. This could prevent a regulatory arbitrage where US capital flows to jurisdictions with weaker protections. The approval of this rule change would signal that the US is not only open for business in the digital asset space, but is committed to doing so in a way that protects investors and maintains market integrity. This is a powerful message for the global financial community. Now, our audience in South Africa, you might be asking, how does this affect me? The answer is in a very real and tangible way. For South African investors, this development is a game changer for several reasons. The first is accessibility to global markets. Traditionally, a South African investor wanting to buy a share in a US company would have to go through a complex and costly process. It involves using a broker, foreign exchange conversions, and is often subject to the country's discretionary foreign investment allowance. This created a high barrier to entry. However, platforms like Luno have already begun to offer tokenized versions of the US blue chip shares. This allows South Africans to invest in these global companies using rands and at this moment without tapping into their discretionary allowance because the tokens are classified as crypto assets. While the Nasdaq rule change doesn't directly affect these existing platforms, its approval in the US would legitimize the entire concept of tokenized stocks on a global scale. It would bring in a new level of confidence and institutional trust to these products. As more US companies become tokenized on regulated exchanges like Nasdaq, it's highly probable that South African platforms will expand their offerings, giving local investors even greater access and diversification opportunities. The second effect is the potential for increased liquidity and lower costs. As tokenization becomes more widespread and efficient globally, the cost of cross-border transaction and investment will inevitably decrease. This is not just a theoretical benefit. Lower fees and faster settlement will directly translate to better returns for investors. For a country with a vibrant but often siloed financial market, this is a significant step toward a more integrated global economy. The final impact for South Africa is the future of the local financial market itself. The South African Reserve Bank and the Financial Sector Conduct Authority are closely watching these global developments. As the US and other major economies embrace tokenization, it puts pressure on local regulators and institutions to do the same. This could accelerate the development of a blockchain-based financial infrastructure within South Africa, potentially leading to the tokenization of local companies, private equity, or even real estate. The Nasdaq news is not just a story about the US, it's a signal of the inevitable future of finance, and it is one that South Africa cannot afford to ignore. So in conclusion, the Nasdaq filing with the SEC is not a minor event. It is a powerful signal that the world's most sophisticated financial markets are not just tolerating blockchain, they are actively seeking to integrate it. This move has the potential to unlock trillions of dollars in value by making financial markets more efficient, accessible, and transparent. It will accelerate the global trend of tokenization, and for US investors, it promises to bring the benefits of blockchain under the protection of established regulatory frameworks. For our viewers in South Africa, it means a future of greater access to global opportunities and a financial system that is better connected to the rest of the world. This is the new financial landscape, and it is being built one block at a time. Thank you for joining us.